Buying stocks can be easy, but choosing the right ones without a reliable plan is difficult. So here are the 5 best stocks to buy now. Let's start with number 1, Alphabet Inc. Alphabet Inc. has proven to be a valuable investment, with its stock price increasing by 55% in 2023. The company's market value has reached $1.75 trillion, making it one of the largest in the S&P 500 and a leading company in the US. Looking ahead, Alphabet, which owns Google and YouTube, the 2 biggest search engines, expects growth, especially with an increase in digital advertising and the boost from election-related ad spending expected in 2024. Beyond its search engine business, Alphabet is a major player in cloud computing and is advancing in artificial intelligence. Financial analysts predict that Alphabet will have an adjusted earnings per share of $6.68 in 2024. This gives the company a forward price-to-earnings ratio of 20.4, which is quite reasonable for a company of its size, given that its average ratio over the past 5 years has been 25.6. Alphabet's financial strength is also evident in its free cash flow, which is about $70 billion for the past year. Analysts suggest that Alphabet's stock price could reach $155 per share in the next year, which would be a 15% increase from its current price. Number 2, Nvidia. Nvidia is currently a strong buy in the stock market after passing a key price level of $505.48. This price was part of a flat base pattern that followed a double bottom base, a bullish sign. The stock showed promise when it previously peaked on December 18th, and it's been performing well, with the relative strength line near its highs, indicating strong market performance. Nvidia reached a record high on August 24th, and since then, it has been forming a new pattern. The stock has an excellent rating from IBD, scoring 99 out of 100, showing it's outperforming 98% of all other stocks in terms of price. The company's earnings are impressive, with a 99 EPS rating. Over the last 3 quarters, Nvidia's earnings per share, or EPS, have grown by an average of 334%, far exceeding the 25% growth benchmark. Last quarter, the company's earnings spiked by 593% to $4.02 per share, and revenue increased by more than 200% to $18.12 billion. Nvidia's CEO, Jensen Huang, attributed the strong growth to the shift in the industry towards specialized computing for AI. The company's future outlook remains positive, although it wasn't as high as some had hoped. Nvidia plans to delay the release of an AI chip for China until early 2024 due to US restrictions. As a top performer, Nvidia is listed on the IBD 50 list, which ranks companies based on objective criteria. While Nvidia is leading in AI chip technology, it faces new competition, including from Microsoft, which is also an investor in OpenAI, as both are exploring their own AI chip solutions. Despite the competition, Nvidia is continuously innovating. At the SC23 Supercomputing Conference, they introduced new AI computing platforms in the Grace Hopper Superchip, which boasts significant advancements in memory and processing speed. Lastly, at the CES trade show in Las Vegas, Nvidia presented its new RTX ray tracing chipsets, aimed at gamers and the visualization market, demonstrating its ongoing commitment to leading in high-tech chip innovation. Number 3, Snowflake. Snowflake is currently an attractive buy, having surpassed a key price point of $192.66, identified as a cup with handle entry. The acceptable range for purchasing, known as the buy zone, extends up to $202.93. The stock's relative strength line has shown some positive momentum recently, though it's currently stabilizing. It remains above its 50-day line and has recently crossed above its 21-day exponential moving average. Snowflake's overall performance is impressive, as indicated by its IBD composite rating of 94 out of 99. Financially, Snowflake has demonstrated significant earnings growth in fiscal 2023. In the most recent quarter, its earnings per share, or EPS, increased by 127% to 25 cents, following an explosive growth of 1,900% to 22 cents in the previous quarter. The company is expected to earn a profit of 79 cents per share in 2024, with a projected 40% EPS growth in 2025. Snowflake specializes in data analytics software that operates on cloud computing platforms, and it is expanding into cloud data management. Amazon Web Services, or AWS, a division of Amazon.com, is a crucial partner for Snowflake. Analysts believe Snowflake could become a significant player in generative artificial intelligence. After its IPO in 2020, the stock initially soared but later experienced a downturn. Recently, it has been rebounding, driven by a turnaround in earnings growth and increasing institutional demand. Currently, 42% of Snowflake's stock is held by funds, and its accumulation and distribution rating of A- suggests strong recent buying by institutional investors. Notable institutional backers include Berkshire Hathaway, led by Warren Buffett, and the Franklin Growth Fund. This growing institutional interest and financial performance makes Snowflake a notable stock to watch. If you're finding this information useful, don't forget to like and subscribe for more insights. Let's move to the next in our list. Number 4. Amazon. In 2023, Amazon experienced its best year since 2015 in the stock market, gaining 81%. Investors are now keenly observing whether Amazon can continue enhancing its online retail business's profitability and maintain its competitive edge in the cloud computing market. With a market cap nearing $1.6 trillion, Amazon is expanding its high-margin advertising business. However, it faces a significant antitrust battle with the US government. Analysts are watching Amazon stock closely in 2024, with several, including RBC and TD Cowen, listing Amazon as a top pick due to its diverse growth opportunities and leadership in cloud business and e-commerce. Amazon's cloud computing business, particularly AWS, is expected to see growth acceleration, especially as companies move past cloud spending cutbacks. Additionally, the introduction of ad-supported Prime Video is anticipated to boost ad revenue growth. However, Amazon faces increasing competition in e-commerce from Chinese firms and in cloud services, particularly in the AI segment. Microsoft has been proactive in the generative AI space, partnering with OpenAI, the creators of ChatGPT. Amazon, in response, is making significant strides in AI through AWS, unveiling AI-focused products and forming partnerships, such as with Nvidia. Amazon's stock is considered a strong buy by analysts, with a 12-month price target of $179.49, implying an 18% upside. The stock's technical ratings have improved, and it is currently a part of the IBD leaderboard. In terms of financial performance, Amazon reported adjusted earnings of 94 cents a share for the quarter ending in September, with a 13% year-over-year increase in revenue to $143.1 billion. The company's e-commerce sales were up 7%, and advertising sales grew 26%. Microsoft. Microsoft, often regarded as one of the best stocks for 2024, stands out as a long-standing leader in the tech industry. The company's significant investment in artificial intelligence is poised to start yielding substantial returns in the near future. In the past year, Microsoft generated an impressive $211.9 billion in revenue, a figure that is expected to grow. A key contributor to this anticipated increase is the launch of Microsoft 365, a subscription-based service priced at $30 per month, which is forecasted to bring in considerable revenue. The company's financial performance in 2023 was remarkable, showing explosive earnings and starting the new year on a strong note. Microsoft's stock, which offers a modest dividend yield of 0.8%, is currently trading around $370, nearing its 52-week high of $384. Despite appearing costly at the moment, the stock is expected to reach $400 soon, making it a potentially lucrative investment for those looking for significant gains in 2024 and beyond. The combination of Microsoft's robust financials, innovative ventures in AI, and the growth potential of Microsoft 365 makes it a standout stock in the tech sector. That concludes our overview of the 5 best stocks to buy now. We'd love to hear your thoughts in the comments below. Tell us which stocks you find most promising for 2024, or if you have any other top picks. Don't forget to like and subscribe for more valuable insights. Your support is greatly appreciated.